Hi, I'm Hannah Wallace and welcome to FinextraTV. Kindly calling into our virtual studio now is Chris Papathanassi, Global Solution Lead at Finastra. So welcome, Chris. Thank you very much for calling in.
Thank you very much for having me.
Good to have you on. So yes, today we're talking about how banks can meet the demands of the modern economy and fast-track their corporate customers to new opportunities, which is an area I know Finastra have been looking at, especially in their report Roadmap to the New Relationship Model, which delves into this in a bit more detail. So I'd like to start by setting the scene and getting a backstory from the report and you explaining what the main aims and objectives were. So let's start there.
Yeah, absolutely. So we set out to discover what it is that corporates will want from their banks in the future. We've seen some dramatic changes in the world, particularly over the past year. And the corporates have to deal with some very different real world problems. At the same time, we've seen technology advance quite significantly, particularly on the retail side and particularly in other industries. So we felt that the corporate banking industry really needed to play catch up, and that's putting them under a bit of pressure. And this is going to lead to a change in the way in which they interact with their customers. And we feel that their business models will shift into one of three different pillars. The first is them becoming what we're calling a pure play product provider. The second is a relationship bank, and the third is a platform player. So the study was really done in order for us to kind of validate our thinking around that and to test whether or not the corporate banking industry, particularly corporate lenders, are well positioned to offer those business models and how well positioned they will be by 2025.
All right, so now that you've set the scene, let's home in on some of the findings from the report, right? So have you seen the priorities among corporate clients and the lenders shift? And if so, what does that mean for the future of relationship management? What about that?
Yeah, so the first thing I wanted to highlight was that the study showed us that 75% of banks we spoke to expect that budgets for digital transformation is going to increase over the next 5 years by around 20%. So from a priority standpoint, that basically tells us that banks really want to get this right. There is a renewed motivation around digital transformation. And we've seen that banks had aspired to it in the past, but certainly what's consistent is that this is something that banks really want to get right now.
Mm-hmm. Okay, so taking all of that into account then, what options are left open for the banks then? What about those?
Well, this is not the demise of the relationship manager. So what we certainly feel that the technology that's available today, automation, digital data, real-time access to data, is going to usher us into a new era, a new world for the relationship managers, where they can simply focus on what they do best. Right? We want to remove non-value add tasks and allow the relationship managers to relationship manage, right, and portfolio manage. Having accurate and real-time data at their fingertips will help the RMs to deliver fast, tailored, bespoke services. We're calling it, or it's been called, the cyborg model, where you kind of take the best of both worlds. You've got the technology, right, that helps to deliver efficiency, and you augment that with a human touch. Mm-hmm. Now, an example of that is around credit decisioning. There's a big appetite to move away from the traditional model where RMs would do a lot of write-up to justify why a bank should be doing a deal, to really moving towards data-driven insights. And so RMs can be freed up to really add more value where it needs to be added. For example, working on how to structure more innovative deals for the bank. Unsurprisingly, we found that the banking sector acknowledges that the businesses they serve are demanding much more of a retail-like experience, one that is much more tailored. They want to be able to bank, wherever they want to bank from. And we found that there's less focus on just providing the traditional sort of account management, relationship management approach, and more emphasis on building real-time access to data and execution and online portals. And as a whole, the banks we serviced were very much moving towards becoming platform players. So this is where they provide packaged solutions, right? They orchestrate packaged solutions from both within and outside of their own ecosystem. And this kind of tells us a little bit about the appetite for collaboration. And there's a great quote from the CEO of a large European bank, which says, if you truly want to empower customers, you have to provide them with the most relevant offering, even if that offering doesn't come from you.
All right, that's interesting and a good quote there. And it leads me quite nicely into my next question, which is talking about the top technology trends you're seeing. So what are they? What would you say you're seeing in the space?
Yeah, so I mean, there is a huge shift towards cloud, right? Particularly because banks are seeking to take advantage of the potential cost savings associated with not having to manage infrastructure, not having to manage hardware, the advantages it offers around security, as well as the promise of being kept evergreen and having your software upgraded continuously. The other is around microservices and APIs. So I'm seeing less of an appetite in the industry for your sort of traditional monolithic application in place of a service-based approach, where the industry is really seeking to leverage as much as possible the same type of service across multiple areas. Take, for instance, the concept of a credit facility in corporate banking. So the corporate customer might have a single credit facility across different products, if you say trade and lending. Now, traditionally, what a bank would do at an operational level, they have a lending system and a trade system. Both have the concept of a facility. So from that point of view, it's duplication. But the world we're moving into, and what I'm seeing, as far as appetite is concerned from banks, is a world where you simply subscribe to a single facility service, irrespective of what line of business you are from. Now, what that does for the bank is it simplifies the way you manage it, the costs, right, to maintain it, to enhance it, and so on. But it creates a consistent experience for the corporate, and also helps to reduce the complexity of the bank's infrastructure. And finally, there's the use of artificial intelligence and machine learning. This is not really a case of if, but it's a question of when. I talked earlier about data-driven insights, but it's also being used around helping to automate operational tasks, provide more control over certain operational activity. You may have heard about an incident with a large bank and a lot of money being involved. So to help more control, and also there is a lot of paper. Right, paper is still prevalent in this industry. So leveraging these technologies to take that paper and digitize in order to create more efficiencies and save cost at the same time.
Mm-hmm. So watch this space. I think it's safe to say, but it wouldn't be right moving on without touching on the challenges. I think so. What challenges do banks need to consider moving forward with their digital transformation journey? Then, what would be your advice?
Well, as far as challenges are concerned, I think that the report highlighted that competing priorities often present some of the biggest challenges to actually progressing with digital transformation initiatives. You take, for instance, some of the regulatory changes that have happened recently. So LIBOR transition, for example. If you talk to any bank today, they will tell you that they are, head down focused on dealing with that regulatory change. What happens then is you need to consider the total cost and time to actually transform, and compare that with what you need to do with certain competing priorities like these regulatory changes, and you end up delaying decisions, kicking the can down the road, so to speak, and that there's a risk there that you end up with what I would term digital transformation inertia. Right, we need to kind of change our mindset and start thinking about how we can start taking smaller steps towards transformation. Because when we look at it as a whole, it's quite a daunting and costly exercise, and that causes banks to have to continue to reconsider and reassess against other priorities.
Sure. And some good advice weaved in there as well, Chris. Thanks. So taking all of these key findings into account then, what advice would you share with banks looking to transition successfully? So you've touched on this a bit already, but how can they deliver the most value to their corporate customers? That's really where I want to end on.
Yeah, so I got three things: iterate, collaborate, and mindset. So from an iterate standpoint, I think we need to be striving for perfection, but don't wait for it. I think all too often it's really easy to 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 want to offer the very best of what we have to offer to our customers, or do nothing at all. So as I mentioned before, wait. And what banks should be thinking about is how they can do things progressively, right, and introduce things to their customers that show their customers that they are innovating, get feedback, and take them on a journey with them. The other one is around collaborating. Again, this comes back to the challenges that we talked about with competing priorities and how a transformation program may look, very costly, because at the end of the day, it's all about the investment. Collaborate. We're in a world now where open APIs platforms are allowing the consumption of innovation to be more to be done much more easily. With that in mind, don't reinvent the wheel. Think about where you can partner in order to make the transformation program simpler and more cost effective. And finally, it's about mindset. So we all like to maintain the status quo, but I think we need to adopt a culture of change. And I always think about other industries and other companies that maybe failed to do that, right, or not do it enough, like Kodak, Nokia, Blockbuster, right? These companies. It's not. I don't think they failed to adopt a culture of change, but maybe they didn't prioritize it enough. And so I think we really need to consider, how fast the industry is evolving, and realize that, see the signs as to what's happening in this industry, and how things can change in exactly the same way. And maybe I'll leave with a quote from the film Moneyball with Brad Pitt's character, where he basically says, when he is receiving a bit of opposition to change, adapt or die.
Brilliant. Again, some very good advice there, and a good quote to end on. So Chris, we'll leave it there. Thank you so much for calling in and sharing insights. It's been a pleasure.
Thank you.